Hi, so crypto's going down, and here's why. Good morning. I thought I'd record this now because, as you can see, I've only just got up. I haven't even sorted my hair out. But I saw an article about a bit of research that Forbes had done, so a pretty reliable source, looking at Bitcoin trades, and I thought this absolutely backs up everything I've been saying about crypto for ages. So let's have a look at it then. This is the article. There's the headline: more than half of all Bitcoin trades are fake. Now, there's something called pump and dump. Now, what you do with pump and dump is that you artificially inflate the price of something, and then when it gets to a certain value, you dump it. All right? So, you know, crypto's looked like pump and dump for ages. Like, you just look at the graph of the price of it. That's not real growth. That's something else. So somebody's added a ton of speculation to it, got the price up to about here, and probably dumped them for this price. And then they've thought, well, we've made a massive margin, haven't we? So let's do that again. So then they did it again to here, and then they did it again to here. This is pump and dump. This is like normal. Like if you look at like a regulated stock, that's what a regulated stock looks like. That's what Bitcoin looks like. It's different. These peaks are artificial. So there's obviously something weird going on with it. Anyway, Forbes has had a look at 157 crypto exchanges and found that more than half daily Bitcoin trading volume is reported as likely bogus. And here's why it's so easy in crypto, because what you can do is you can create wallet providers don't really do due diligence on their customers, right? Some of them really do, but there are a lot of wallet providers. Wallet providers are basically, you have to set up like a digital wallet which contains your digital currency, right? So you put your fiat currency, your sterling, your dollars, whatever, into this wallet, and then with that wallet you can then buy crypto. So you need a wallet. So the financial institution, for want of a better word, is the wallet provider. That's the thing that does all the trading and holds all the assets. So if you're, I don't know, criminally minded, what you could do is you could set up a wallet in your name, a wallet in your brother's name, a wallet in your sister's name, and mother, and if you've got 10 relatives, and they don't even have to know. And these wallet providers, some of them don't even do customer due diligence. They don't even ask for a copy of ID or anything. But you could set up 10 of these wallets and then every day trade your crypto asset between each person on that exchange, and pay a little bit more every time you trade, and that pumps up the price artificially. If you're, say, a Russian oligarch who have your own wallet providing firm, then you could set up about 1,000 accounts and do that every day, couldn't you? So it's so easy to do. Pump and dump was a thing that was called insider. Well, it's not insider trading, but it's wash trading. See, they mention pump and dump here. So, whatever. All of this is actually illegal on a regulated. So, if you were doing that in the US stock markets, then you'd probably go to prison or be fined, seriously. If you did it in the UK, because the FCA is rubbish, nothing will happen. You'll get told off and not be allowed to do your job for a couple of years. But anyway, maybe that's me being a bit cynical. But we've had quite a few big cases where people have seriously broken trading laws in the UK recently, and nothing's happened to them really. They've just lost their job, and it's like, all right, well, it's still worth about 20 million quid each, so be all right. my fundamental point, though, is that crypto doesn't actually exist. There's no asset. There's nothing behind it. So this is essentially talking about where they're doing the research, what methods they used, volume discounts, proprietary methodology, rather than 10 factors, exchange, home regulating. 49 crypto exchanges that were assigned discounts of 0 to 25% generated $39 billion of real Bitcoin trading activity across all markets, spots, derivatives, and futures on June 14th. 73 exchanges with volume discounts. Okay, so that's the... There's supposed to be some pictures here. That's not working. Why are the pictures not loading? Oh, that's so annoying. Why won't it download the pictures? Hold on, let's try reloading. Why won't Forbes let me look at their pictures? But basically, over half of crypto is fake. I mean, it's fake. I mean, not to mention the I mean, it's a currency. The thing that you're buying doesn't exist in reality, and actually, it kind of doesn't exist digitally either, because it's so the property itself is so heavily encrypted that only the person who owns it can actually see what it is. So, in reality, you've bought something that only you can see and nobody else can see, and doesn't actually exist in the real world. So that's like paying thousands of pounds for essentially a Word document that you open and only you can see. But apparently you can sell that on for a few £1,000s maybe. It's literally pure speculation. There's absolutely zero value in it. The only real value in it is, you know, if you want to go on the dark net and buy some illicit drugs via like a site contained within an onion, you can do that. And you need crypto for that, because the criminals don't want to receive actual currency. They want to receive digital assets via their wallet, and so they can pass that off as like trading or whatever. You know, so they can launder that money and make it look like genuine money rather than the proceeds of crime. So that's really the value of crypto. You know, crime has evolved over the last 5-10 years. It's no longer, you know, getting drugs is no longer shady blokes asking you for 20 quid or whatever, or 100 quid, and then they disappear for a few hours and then they come back with a little bag. You know, that doesn't, you know, I'm sure that probably still happens somewhere, but, you know, that's that's my teenage, that's what I remember in my teenage years. That's how that happened then. This was, God, about 20 years ago now. But crime has evolved a lot, you know. And so crypto is going to go down at some point. And I keep saying, you know, it'll go down. It'll go down when regulation starts to actually bite. You know, the price of Bitcoin collapsed or started to collapse here. I think first collapse was when China said, oh, maybe we ought to look at regulating this. And then I think this was when the US, or the other way around, I can't remember. But basically every one of these collapses is when a regulator has gone, oh, maybe we should actually regulate it properly. Maybe these wallet providers, we should treat them the same as banks, and maybe they should have the same capital adequacy requirements. And, you know, if these wallet providers are going to keep spouting nonsense about this being, you know, replacing currency, then, well, maybe if they're a currency, maybe we should actually treat them like a deposit-taking institution. That's what we call banks, deposit-taking institutions. And they need real capital adequacy, and they need stress testing to make sure that, you know, if the value of their currency collapses, they don't go bust. You know, maybe they should follow the same rules as banks if they want to compete in that space with a new, what they call currency. You know, and I think there's a perfectly legitimate case for that. I think there was a perfectly legitimate case for that 10 years ago, when crypto was being developed, because if it's being marketed as a currency to the general public, you're selling cash accounts. And why is the FCA not treating it like that? It's absolutely mind-blowing, this whole... I mean, I know I'm having a go at the FCA because they're my regulator and they're the financial services regulator in the UK. I suppose it's more the PRA, Prudential Regulation Authority. But seriously, like, if they're selling something as cash, they need to be treated like deposit-taking institutions. And why the hell are they not? Who's paid off the regulator so that they're not? Well... I'm getting a bit conspiratorial there, but I mean, it just absolutely doesn't make any sense. It really doesn't make any sense why these wallet providers haven't been regulated yet. I mean, Bitcoin's been a massive thing for, you know. I mean, this is so. This is when it was basically harmless, right? When Bitcoin was harmless until about, when the price was like down here, below $1,000. That was January 23rd. This is when Trading Economics started tracking it, actually. It was about January 2011. So that's when it was, but $1,000 a Bitcoin. I mean, that's a really, you look at other strong currencies, a dollar's like £1.20. I think the euro is around about the same. But, these currencies are all they're not worth, nothing's worth $1,000, right? In terms of currency, nothing is. So it's not a currency. It's not anyway. But it's been pumped up and dumped so many times. Look, you just look at it. That's what it looks like. Real company, variability, but variability between peaks. This is the thing that we're, this is the thing that we're looking at. There's variability. But you can't really see it very well here. But if we go like 5 years, there's variability between peaks, and you can see the price sort of moving gradually over time. Here, you see the price, just go up. No variability between peaks. You just got peak, trough, peak, trough, peak, trough, peak, trough. Like here, you see it move. Oh, hold on, let's do a similar time comparison so you see it a bit more clearly. 5 years. So the peak, trough, peak, trough, peak, trough. You don't really get that with a proper company. You get like a sort of a gradual peak. Look, see, this peak took like, this is my point, this peak, this little peak, so this larger peak here, let's say 29th of March through 25th of May, so March, April, May, so there's about 2 months to get to that peak. So you go from here, which is 14th of December, through, I can't clip it, January 9th. And you've got a week off for Christmas there. So that's like 2 weeks to get an asset growth of 15,000 to, what was that, 41. So that's like a 200% growth in about 2 or 3 weeks, right? This one is about 460 to 560. So that's like a 25% growth in a month, in 2 months, right? This is how like a normal stock behaves. This is how something artificial is behaving. Something weird is going on to get these kind of peaks. Downward, the stock coming down, that can happen very quickly, because if confidence is like, if BP blows up one of their oil rigs in somewhere politically sensitive, then you'll see, well, in fact, you did see that when... when was it? I can't remember when the oil rig collapsed. I think it was this. It might be this one here where it just like collapses on like one day. But that happens. You do get negative variability, straight down. But you almost never get these kind of, and maybe like as a one-off. If a company's made excess profits like recently. I mean, but even so, BP's made tons of profits this year because of the oil price going up, but you don't see that. There would be a legitimate reason for BP's share price to shoot up. It hasn't happened because that's not really how markets work. They're a bit more tentative. This is artificial. This is weird. Okay. Anyway, I've gone on for way too long about this. It's been 15 minutes. 15-minute video explaining why there should be more regulation of crypto assets. There should be more. I mean, it doesn't really need it explaining in any more detailed terms than in an economy, in a market where there's trillions of dollars of consumers' assets, there's currently zero regulation. And we know, because most regulators have said so, that terrorists and criminals are using this to launder their money. And for some reason, the regulators just sat there going, just too much work. Let's just have a go at advisors a bit. Let's ignore this festering, sore over there. Let's go and kick financial advisors a bit more. Anyway, that's it. That's enough from me today. I hope you found this informative. Like, share, subscribe, all that. And I'll see you soon.